more recently, we've been receiving phone calls, not only from employees, but a number of employers regarding what do I do if I'm terminating employees, if I lose health coverage through my employer, if I reduce hours in employment. And the answer is really, you've got a lot of different options. The first thing I probably would start off by saying is that make sure that you try to seek out a financial advisor, a professional that you might be able to either call on the phone directly or maybe even meet with to discuss what the implications of either COBRA, the marketplace, or a short-term medical plan might mean to your financial future. To kind of go into these, there's not really a one-size-fits-all for everybody approach. It really needs to be tailored to your specific needs and concerns. And so the first thing I'll mention with COBRA is nothing more than an extension of your current medical benefits through your employer. And what a lot of times people get financially concerned with the cost of COBRA, but there are some other background alternatives that you need to understand when you discuss why you might stay on COBRA. First of all, you may have already met some of your deductible or your out-of-pocket expense, and by doing COBRA, all that does is it just is an extension of your current benefits. Those benefits would roll forward, and most health plans run on a calendar year cycle. So just understand that when you decide to make a decision like that, you understand where you are with those deductibles, out-of-pocket expenses, your benefits. The second option would be to look at the marketplace. The marketplace, or sometimes otherwise known as Obamacare, can be, again, handled through an advisor. But if you want to go it on your own, you're going to go to healthcare.gov, and the marketplace is where you're going to look. There's a number of health plan options, but some of the key features that you need to be aware of are, one, there's no pre-existing conditions and there's no medical underwriting, okay? This is reserved to people who have lost their coverage through their employer, which might mean either you have been furloughed, you've been laid off, you've been terminated, you've reduced hours. And so through the marketplace, the appeal is that you might also qualify for tax credits and subsidies to help pay your premiums. This is very important during this period of time because obviously people's incomes are reduced or they may have diminished altogether. So with the fact that the marketplace is willing to help jump in and pay some of those premiums or pay parts of those premiums, that's important to know. The range in which somebody is eligible for those tax credits is 100 to 400% of the federal poverty level. Again, make sure that you figure out what those amounts are. But just to give you a little taste, as a single individual, if your income ranges from $12,500 all the way up just close to $50,000, you very well might qualify for tax credits to help pay a portion of your premiums. The lower your income is on that spectrum there, the more the federal government's going to be willing to step in and help pay your premiums. So one of the attributes of the marketplace is that there's no pre-existing conditions. There's also no medical underwriting. In certain circumstances, it can be a little more difficult with the marketplace in that you do have to set up an account. You have to create a username and password. You will be required to also input some data, such as your name, who your tax dependents are, your income. And quite frankly, you can do that on your own. A lot of people do seek out financial professionals like us to help with that. But in terms of setting that account and so forth up, all of that is being done through healthcare.gov. So whether you have somebody help you or you do it on your own, that's where that's going to all start. From start to finish, it probably is going to take you a good hour to get that entire account set up and basically rolling through the federal government. Then on top of that, there is some follow-up down the road. And that's where, again, we do recommend that you seek somebody else, such as a financial advisor, a financial professional who's done this before, so that you just don't get lost trying to figure out how to handle it on your own. The short-term medical plans are another option. One of the fallbacks with a short-term medical plan that really need to be thought through, one, they're going to be the least expensive way to do this, and for a limited period of time, they provide somewhat of a gap between where you are today versus where you want to be. But the drawbacks of a short-term medical plan are that you may have to qualify medically in order to get those, okay? Unlike the marketplace, which is no medical underwriting, no pre-existing conditions. Your COBRA, again, no medical review. You just simply roll forward with that. On these short-term medical plans, you're going to have to probably qualify with some medical questions. And then more importantly, you may be subject to pre-existing conditions on those short-term plans. So while they draw people in because of costs, we want to be a little cautious on the back end because they may not actually provide with what you're wanting to do. So to kind of sum this up, there are a lot of options here. Each person has their own path that they may want to go down with it. Just make sure that you understand all the implications as you move forward.